Hello and welcome to another chart lesson from Oliver Velez. My name is Oliver Velez, of course, and today we're going to review a former recommendation that I made in the Velez Opportunity Report on Lockheed Martin. This slide was posted in the Velez Opportunity Report on a Sunday evening on March 21st. I pointed out the fact that Lockheed Martin had formed what I consider to be a possible death sign. And what exactly is a possible death sign? It's simply a stock that has had a very, very dramatic run to the upside, after which it gaps to the upside, and the day in which it gaps, the open and close is relatively close together, if not entirely the same. Many people refer to this bar as a doji bar, to use Japanese candlestick parlance. But the name of the bar is somewhat irrelevant. The key is that after a solid run to the upside, Lockheed Martin gaps to the upside and experiences no additional price appreciation from its opening gap. Now, I pointed out that there was a huge possibility after such a gap that there would be a gap to the downside the following Monday morning. Okay? There was no way to be 100% sure that the stock was going to gap down, but this particular scenario often does generate a gap to the right-hand side of the bar as well. So if in fact Lockheed Martin gapped down, I recommended that aggressive traders take an immediate short. All right, let's see what Lockheed Martin did on Monday morning. It gapped, as expected. Now, the stock gapped at the open down in the high $85 area. After gapping, it rallied a bit intraday in an attempt to fill a good portion of the gap. Now, as I've mentioned to you on a number of occasions, the market does not like gaps. There is a strong, powerful tendency on the market's part to go back and fill in all or a portion of areas that it misses. And I always teach my traders this concept in the form of a person sweeping the floor or mopping the floor. You can miss a spot, and if you're mopping the floor or sweeping the floor and you realize you've missed a spot, you evidently go back to try to sweep the area you've missed. Well, the market has that same tendency, that same desire. It hates areas that were not covered. And there is a strong, powerful tendency for gaps to be at least partially filled. Now, a lot of gaps get entirely filled, but others that don't get entirely filled tend to get half of the gap filled. If you look very carefully, after the stock opened, and now the opening price is the bottom of the green bar here, the stock rallies to the upside. As a matter of fact, let me draw this in for you so I can demonstrate what it did at the open. After opening, the stock rallies to the upside. And let's paint that green for you. It's not going to be exactly perfect, but you get the idea. So Lockheed Martin opens, then gaps and rallies to the upside, giving even more aggressive traders an opportunity to short more of Lockheed Martin into the gap. Okay? Now, I teach my traders to zero in on intraday time frames to pick these gift rallies back into their gaps, to pick the entry points based on intraday setups, which is a subject beyond our talk today. But at any rate, this was our entry day on the short. Okay, that was our entry day. Let's do a no fill on that. Now, after shorting, our stop was to be placed above the death doji. is where our stop was to be, above the death doji. And as we can see, LMT, or Lockheed Martin, continues to erode to the downside. So we're short in the area of the mid $85 area. Aggressive traders got an opportunity to short as high as 86, maybe 86 and some change. And the stock is currently in the low $82 area and mounting its gains on the downside. Now, I want you to take a good look at the price area of support. Will Lockheed Martin reach this price support area? There's no way to know. But it's necessary for us to identify what the potential move can be based on prior areas of support and resistance. There are some minor areas of support before this major area of support. Here's a minor area. Now, how do I pick that minor area? Any small area of price congestion represents a spot or a zone that could generate some support. All right, there's no real support in an area that experienced no vacillation, no gyration, no congestion. The support and resistance comes from congestion. Okay, this is a very, very fat area of price congestion. And so as a result of that, this entire zone here would be a very, very thick area of support, the stock coming down into it. So this is our target zone, I'd say. Now, what happens if Lockheed Martin doesn't quite reach the target zone? All right, well, you have to, on the way to a target, also keep a stop above the price should Lockheed Martin blast off to the upside before reaching your target. All right, so we must protect our gains. And there are two possible ways, there are several ways to do that, if you will. You can use a pivot stop, and a pivot would be here. That's a pivot stop. You're simply going above the most recent high. A lower pivot stop would be there. Or, all right, what you could do, if I were doing a pivot stop, I'd do my pivot stop right there, the most recent pivot. Okay? And you could also use the concept of placing your stop above the most bearish bar of the entire decline. So it looks like the most bearish bar was Tuesday. Today is Thursday. Okay? Today's Thursday. This is Wednesday. And the most negative bar of the decline so far is Tuesday. So the theory being, if the bulls manage to stage a rally that overcomes the most troublesome bar, it's an indication that they have actually come back. And we wouldn't want that. So I suggest that if you're holding some very nice profits, that at the very least you take off part of your position should Lockheed Martin take out the most negative bar, and another part maybe above the pivot to give the back half maybe a little bit of extra room, either this pivot or that pivot. Now this, of course, is only in the event that Lockheed Martin starts to show strength before we get to the target zone. I promised you this was going to be a fun little trade, and so far, it's not only fun, it's been very profitable. Until next time, this is Oliver Velez.